So I'm going to go over the template for a bank reconciliation. Now, this is something that we need to do because when I'm looking at cash on the balance sheet, I would expect that if I went and looked at the bank statement that the cash would be the same, and sometimes it's not. So what we need to do is tell the reader of the statements why it's not the same. Okay, so we'll start with the bank side. So what we do is we look at our bank statement. So you can either do this online or you can look at a printout of the bank statement and find the ending bank balance. So for example, if this was a December 31st year end, I'd look at the bank statement balance for December 31st, and this is what I would put here. Now, one of the reasons that I can accept that it's different is because there's deposits in transit. So say, for example, on December 31st, you had a company that had cash in their till, and then they took all the cash at the end of the day, and then they didn't actually put it into the bank until the following day. So that's an example of a deposit that's in transit that you had on December 31st, but it wasn't deposited into the bank until the following day or the following couple days. So I can accept that as a difference. Another difference that I can accept is outstanding checks. So these are checks that the company has already issued and have mailed to the people that they're paying, but those people haven't deposited them yet or cashed them in yet. So they are outstanding on our books, but the bank still hasn't put them through because for whatever reason or not, the person that we mailed the check to hasn't cashed it. So I can accept that as a difference. And then the odd time, the bank will actually make an error. So I've seen before where the bank will accidentally deposit somebody else's deposit into our company bank account or accidentally take money out of our bank account that is ours. So in those cases, we would just leave them on our bank reconciliation. So I'll just say add, deduct, bank errors. And once I have those items recorded, then I have this adjusted bank balance. And this is the amount that you'll see as the cash item on your financial statements. So now let's look what happens on the book side. So when I'm saying the book side, I'm looking at my ending book balance. So if I was in my accounting system and I looked at cash, this is what the balance is. Now that balance should be this new balance that I just recorded. So when it's not, you know that you've actually made mistakes when you were recording all of the items. So some of the mistakes that could be made is when you're reviewing the bank statement, you might have missed not posting an item on there. And say, for example, an item could be service charges that you didn't know about that you didn't record. Or if somebody took money out of your bank account for an automatic bill and you forgot to record that, then you would put that there. Or if somebody deposited cash into your bank account and you didn't know about that, then you would have to report it here. So then I'm just going to say add, deduct, and each question is going to be different. Items on the bank statement. And I'll just say not recorded by the bookkeeper, and they should be recorded. And sometimes the bookkeeper will record items, but they've recorded them wrong. So I've seen this before where a bookkeeper has written a check and then it goes through the bank and they actually post it into their system. They've sometimes transposed the check number by accident. So then that would be an example of a bookkeeper error. So again, I'll just say add deduct. Bookkeeper errors. So then once you add all of those up, then I'm going to have my adjusted book balance. And these two balances have to be the same. If they're not, then you've actually made a mistake on your bank rec. So now what we need to do is, after you identified all of the adjustments that need to be made, we would journalize this book side. So any of these items that we've identified that we missed putting into our accounting system, we'll have to do journal entries for. So now what we're going to do is take a look at two different types of bank reconciliation questions that you get as a student. So the one type would be just a narrative of someone explaining to you what's happened. So then you have to take from that explanation and figure out what's the book side and the bank side. Or another type of question is having you actually do a bank reconciliation where we give you parts of the accounting system and then we give you parts of the bank statement. And then you'll have to go through and do the bank rec from that way. So we'll get right to it.